Zimbabwe's central bank plans to sell gold coins to the public from July the 25th as a store of value to stabilize the nation's tumbling exchange rate and offer an alternative to the US dollar, which is in high demand. Central Bank Governor John Magundia said the gold coins will be called Musia Tunia, which means smoke that thunders, a reference to Victoria Falls, the gold's greatest sheet of falling water, which traverses Zimbabwe and Zambia. Well, will it work? Batanai Matsika, head of research at Morgan & Co. Investment Bank, joins us from Harare to answer that question. Batanai, good afternoon to you. Thank you so much for joining us. So how exactly will this work? We're looking at, I guess there was a press statement from the government which kind of explained how it works. Can you break down how this is supposed to work?
Okay, so in terms of the concept, this is similar to the Kruger Rand coin that's associated with South Africa. Basically, it is a physical gold coin that is, in terms of purity, is 22 carats. Weight is 1 troy ounce. So we're basically looking at a price of around 1,800 US dollars for a coin. But the good thing in terms of what we're picking from the press statement is that it's open to the public, which means that any investor would have the physical possession of that gold coin and at the same time be issued an ownership certificate. So it's up to that investor then to make use of custodial or safe custody services from any bank of their choice. The coins are tradable. They have liquid asset status. They also have prescribed asset status. I think this is quite positive for insurance companies, asset management companies that really want to comply in terms of prescribed asset thresholds. So yes, we expect the coins to be available from the 25th of July 2022.
Do you think this will reduce demand for US dollars in Zimbabwe?
Yes, so from the press statement, we see that the way that they've put it out, they're saying that this coin will be available in both USD and ZWL. From the trends that we're seeing, the inflationary pressures are sitting at 132% in terms of the year-on-year inflation, around 32% in terms of the month-on-month. So we're seeing that a lot of investors, individuals and households are concerned about inflation, and that is why they were parking ZWL balances in USD, as a advantage. But this then opens up the opportunity then to explore a different asset class, an asset class that's more stable, which is gold. So yes, theoretically, we from what we gather, we expect that probably demand on the parallel market in terms of ZWL balances that are actually pushed on that market, it would actually go down as there is another option really to park ZWLs.
Okay, thanks for explaining that. Speaking of the US dollar, I think last time we had you, we talked about a multi-currency system that's been allowed that sees the Zimbabwean dollar and the US dollar used both in the nation. Does this in any way undercut the move to sell gold?
Okay, so you find that the multi-currency regime that the government is actually pushing is also earmarked as then trying to also promote the ZWL so that it moves along other currencies. But what we're seeing on the ground is just a confidence issue around the local currency. I think it will take a lot of time before people can settle with the ZWL balances. So for example, if you're a civil servant and you're earning around 36,000 ZWLs, which is around $50. So the moment you receive that money, the tendency is that you probably want to park it in a more stable asset. And the option that you have that's available is really putting it in USD. And most of the times you make use of the parallel market. And that is why, these gold coins are then being introduced to say that there's now another option. Instead of moving your money to the parallel market, you can now park it in a legitimate asset class, which is gold, in a way of probably trying to boost financial intermediation. Because I think, the problem is that we are having two economies. We have one formal one and the other which is informal, and therefore there's need for some form of financial intermediation.
So will that financial intermediation between gold and the US dollar, what does that leave the local currency?
Okay, so in terms of local currency transactions, what we've seen is that there are certain, transactions that continue to happen in the local currency, especially when you consider issues to do with change, because I think coins, USD coins, or just change in general is really hard to come by. So you find that there's certain transactions that continue to happen in ZWLs, especially for basic goods in supermarkets. So that is where we expect, the ZWL to be exchanged hands when you're buying groceries and things like that. But then it then comes to real capital goods like cars and then maybe furniture, and even in the properties market, that is predominantly a US dollar market. So we're saying that, in terms of transactions and asset classes, it's predominantly USD, but for smaller transactions, then the ZWL kicks in.
Wow, thank you for that breakdown. It really is a tale of two cities with two different currencies used in different sectors. If this doesn't work, what other methods can the Central Bank of Zimbabwe resort to?
Okay, so the strategy, right, is one, trying to boost investments, because I think there's a realization that, in terms of the savings rates and how people are investing, the limited options. So that's a positive from a strategy to preserve value and the like. So I guess they will continue pushing for it. But what we see on the ZWL side, I think, the monetary authorities are quite clear. They'll do everything to try and protect the ZWL, and that is why they say that, this gold coin is also available in the local currency. It's a move of also trying to boost confidence in the local currency. There are certain sectors within the economy, certain parties like exporters that also want that ZWL component, especially when it comes to costing. It's much cheaper if you are working from a ZWL cost base to then push products and export internationally. So there are a lot of moving parts, but we think that, the government, money authorities and certain sectors of the economy, especially the exporters, will also try to promote the existence of the local currency.
Very interesting stuff. So much fascinating news coming out from Zimbabwe, and we appreciate your time in explaining everything to us. Batanai Matsika, Head of Research, Morgan & Co. Investment Bank in Zimbabwe. Thank you so much.